The cryptocurrency market is experiencing one of its most brutal sell-offs in recent memory, and investors are asking the same question they always ask during these moments. Is this capitulation, or are we heading even lower? Today, we're going to dig into what's really happening with Bitcoin, Ethereum, and the broader crypto market, backed by actual data and verified sources. No hype, no speculation, just the facts about where we stand right now in February 2026. Let's start with the numbers, because they tell a sobering story. According to Yahoo Finance and Coinbase data, Bitcoin is currently trading around $73,000 to $76,000 as of early February 2026. Now, you might be thinking that doesn't sound terrible, but here's the context. Bitcoin reached an all-time high above $126,000 on October 6, 2025, as reported by Reuters and multiple financial sources, including the Digital Chamber and Plus 500. That means Bitcoin has fallen approximately 40% from its peak in just 4 months. 40%. That's a devastating decline for any asset, let alone one that many investors thought would continue climbing after the October highs. But Bitcoin isn't alone in this bloodbath. Ethereum has been hammered even harder. According to current market data from Yahoo Finance, Ethereum is trading around $2,000 to $2,400, down from peaks near $5,000 earlier in the cycle. That's roughly a 50% decline. Fortune magazine reported that Ethereum dropped nearly 20% in just 1 week in late January 2026, with some of the sharpest selling pressure we've seen in years. Solana, which many considered the hot altcoin of this cycle, has been absolutely destroyed. Crypto Ticker and Yahoo Finance confirm that Solana broke below the $100 psychological support level in early February 2026, marking its lowest price point in nearly a year. The coin is currently trading around $90 to $105. XRP has similarly struggled, with ABC News reporting significant declines across major cryptocurrencies, though XRP has shown slightly better resilience at around $1.50 to $1.60 according to current data. So what's causing this massive sell-off? It's not just one thing. It's a perfect storm of factors that have converged to create extremely bearish conditions. According to Crypto Daily and Fortune magazine, several key catalysts are driving this downturn. First, there's the macroeconomic environment. The Federal Reserve held interest rates steady at 3.5 to 3.75% during their January 27th to 28th meeting in 2026, according to Crypto Daily. This maintained restrictive monetary policy has kept pressure on risk assets. Bitcoin fell from $90,400 to $83,383 within 48 hours of that announcement, a sharp 7.3% decline that highlighted crypto's acute sensitivity to monetary policy. Second, we're seeing unprecedented institutional outflows from Bitcoin ETFs. This is huge, and it's one of the most significant warning signs in the current market. According to the Coin Republic and analysis from Galaxy Digital's Alex Thorne, Bitcoin ETF outflows reached approximately $2.8 billion over a 2-week period in late January 2026. On January 29th alone, investors pulled out nearly $818 million from Bitcoin ETFs, as reported by A-Invest. BlackRock's iShares Bitcoin Trust, known as IBIT, saw $317.81 million in outflows in a single day. These are massive numbers that reflect a clear shift from accumulation to risk-off behavior among institutional investors. What makes this even more concerning is that Bitcoin is now trading below the average Bitcoin ETF cost basis. Alex Thorne from Galaxy noted that Bitcoin traded below the implied average cost basis of approximately $87,830 per coin. This means that on average, Bitcoin ETF investors are now underwater on their investments. Despite this, Thorne pointed out something interesting. Only 6% of ETF assets have left, while 94% remain, showing that many institutional holders are sticking with their positions despite significant losses. Third, there's the geopolitical and policy uncertainty. According to multiple sources, including TapBit's market analysis, renewed rhetoric around tariffs, ranging from 25 to 60% on various goods, including autos, pharmaceuticals, and semiconductors, has created broad supply chain inflation fears and risk aversion. This has contributed to investors moving away from speculative assets like cryptocurrency. The sentiment data paints an even bleaker picture. The Crypto Fear and Greed Index has hit 14, firmly in the extreme fear zone, according to AI Invest's analysis. This level of panic is a direct reaction to sharp price declines and massive ETF outflows. What's particularly telling is that demand for protective put options has surged dramatically. The notional open interest for Bitcoin $75,000 put options reached $1.159 billion, almost matching the $1.168 billion in $100,000 call options. Traders are positioning for further downside, not upside. Google Trends data, as reported by CoinDCX, shows that global search interest for the phrase Bitcoin bear market has surged to its highest level in the past 5 years between late December 2025 and early 2026, even higher than the spike seen during the 2021 crash and the 2022-2023 bear market. This kind of search behavior typically appears when fear is at its peak and confidence is shaken. Historically, these panic-driven search spikes have aligned with market bottoms, which could be a silver lining if the pattern repeats this time. Now let's talk about liquidations, because they've been absolutely savage. According to TapBit's comprehensive market analysis, over $2.2 billion was liquidated in futures in 24 hours on February 1st, 2026, quickly labeled Black Sunday 2 across trading communities. Ethereum led the liquidations at approximately $961 million, representing about 44% of total liquidations, while Bitcoin accounted for $679 million, or about 31%. Solana saw $168 million liquidated. Long positions dominated these liquidations at 80 to 85%, reflecting how euphoria from late 2025 and early 2026 was brutally washed out. But here's where things get interesting from a contrarian perspective. Despite all this bearish data, there are some potential signs that we might be approaching a bottom. Let me be clear, I'm not saying the bottom is in, I'm saying there are some indicators worth watching. According to market analysis shared across multiple sources, Bitcoin is currently showing bullish divergence on the Relative Strength Index, or RSI. The price keeps pushing lower, but the RSI is maintaining higher lows. Additionally, on Bitstamp, Bitcoin briefly tapped the 200-week moving average, which historically has been a significant support level during bear markets. The weekly RSI for Bitcoin is now officially on the oversold side at 28, according to technical analysis cited in various market reports. While this doesn't mean we must bounce, we can always go lower, it does suggest that if there's going to be a bounce, this area has a lot of confluence. Ethereum and Solana are similarly oversold, with Solana's RSI hitting 23, the most oversold it has been in a very long time outside of the tariff sell-off fears. There's also an interesting liquidation map perspective. According to Bitfinex long data and liquidation mapping shared by analysts, there's approximately $25 billion worth of short positions set up between current levels and $108,000, compared to only $800 million worth of long positions down to $64,000. Market makers typically hunt for the biggest pools of liquidity, which suggests there could be incentive to push prices back up rather than continuing to grind lower, at least in the short term to medium term. Let's put this in broader market context because Bitcoin doesn't exist in a vacuum. According to CNBC and Bloomberg reports, the stock market has been experiencing its own volatility. The S&P 500 fell to around 6,800 points in early February, marking a 7-week low according to Trading Economics. The tech-heavy Nasdaq has been particularly weak, losing major exponential moving averages and trending downward, with software and semiconductor stocks getting hammered. Bloomberg reported that the Nasdaq 100 slid 1.8% on February 4th, with software firms and chip makers leading the decline. However, and this is crucial, stocks are still much closer to their highs than Bitcoin is. While Bitcoin is down 40% from its October peak, the S&P 500 has only pulled back modestly from recent highs, and over the October to February period, the S&P 500 actually climbed about 3 to 5%, while Bitcoin crashed. This divergence is significant. In 2022, when we saw similar oversold readings in crypto, stocks had already shed massively alongside Bitcoin. This time, traditional markets are holding up relatively well, which could be either bullish or bearish for crypto depending on how you interpret it. On one hand, it suggests crypto is oversold relative to other risk assets. On the other hand, if the stock market does roll over significantly, and historically, midterm election years like 2026 see an average intraday drawdown of 18% according to analysis from Nasdaq and Motley Fool, then crypto could face even more severe downside pressure. Bitcoin has historically shown high correlation with tech stocks and risk assets, meaning a sustained stock market correction could drag crypto much lower. It's worth noting what some major market participants are saying. Michael Burry, the investor famous for predicting the 2008 financial crisis, warned that Bitcoin's sharp decline could trigger a cascade of forced selling across multiple asset classes, according to Coinbase's market analysis. Meanwhile, Bitwise CIO Matt Hougan stated in a memo reported by Bitcoin Magazine that the crypto market has been in a genuine crypto winter since early 2025, comparing the current environment to previous downturns in 2018 and 2022, where markets remained depressed despite incremental positive news. Jasper DeMare, a desk strategist at Wintermute, quoted by Fortune magazine, attributed Bitcoin's breakdown to a confluence of three factors: disappointing Magnificent Seven earnings that cracked the AI narrative, a violent precious metals unwind, gold and silver both crashed hard in late January, and uncertainty around Kevin Warsh's nomination as Federal Reserve Chair. All of these created a risk-off environment where speculative assets like crypto got hit the hardest. So where do we go from here? The honest answer is nobody knows for certain, but we can look at probabilities and scenarios. In the near term, Bitcoin needs to hold the $66,000 to $70,000 zone. Multiple analysts cited in market reports have identified this as a critical support area where large entities accumulated. If this level breaks, we could see another liquidation cascade toward the $60,000 level or even lower. Some bearish analysts are calling for Bitcoin to test $50,000 or even lower levels if selling pressure continues. However, there are potential catalysts that could turn things around. The Digital Asset Market Clarity Act, which Polymarket odds show over 70% probability of passing in 2026, could provide regulatory clarity that institutional investors want to see. President Trump's nomination of Kevin Warsh as Fed chair, set to take office May 15, 2026, according to Crypto Daily, could potentially signal a more dovish monetary policy approach in the medium term, though markets remain skeptical about imminent rate cuts. Additionally, the fact that so many retail and institutional holders are now underwater on their positions, combined with extreme fear readings and high bearish positioning, creates conditions where a relief rally becomes more likely on any positive catalyst. Crypto markets have a history of violent snapbacks when everyone is positioned for further downside. The key word there is relief rally, not necessarily a return to the bull market, but a bounce that could provide an opportunity for those stuck in losing positions. From a longer-term perspective, it's important to remember that Bitcoin has been through multiple cycles like this before. The 2022 bear market saw Bitcoin drop from $69,000 to under $16,000, a 77% decline. The 2018 bear market saw similar devastation. Both times, Bitcoin eventually recovered and went on to make new all-time highs. The question is always about timing and whether you can stomach the volatility and drawdowns that come with this asset class. One thing that's become clear in this cycle is that the returns haven't justified the risk for many investors. As noted in market commentary, you could have bought silver and gotten similar returns to Bitcoin this cycle with far less volatility. You could have bought Nvidia in 2022 and outperformed Bitcoin. You could have bought major tech stocks and avoided a 40% drawdown. This reality is causing some investors to reassess whether the risk-reward profile of crypto still makes sense, especially when regulation remains uncertain and use cases beyond speculation haven't developed as hoped. The bottom line is this: we're in a brutal crypto bear market that may or may not be near its end. The data shows extreme fear, massive outflows, significant liquidations, and price action that has been relentlessly bearish for months. Bitcoin closed January 2026 down 10% for the month, marking its fourth consecutive monthly decline according to Crypto Daily. Ethereum fell 17.7% in January, marking its fifth consecutive monthly loss. These are not signs of a healthy market finding a bottom. These are signs of a market in distress. At the same time, some technical indicators suggest we may be approaching oversold levels, where a bounce becomes more probable. Sentiment is at rock bottom, which historically has been a contrarian indicator, and institutional infrastructure remains in place. The ETFs still exist, even if they're seeing outflows, and regulatory progress continues, even if it's slower than hoped. For anyone watching this market, the key is risk management. Don't invest more than you can afford to lose. Understand that Bitcoin could easily drop another 20 to 30% from current levels before finding a true bottom. But also understand that if you're a long-term believer in the asset, buying near these oversold levels has historically been rewarded, eventually. The question is whether you can handle the uncertainty and potential for further losses while waiting for that eventual recovery. The crypto market will recover at some point. It always has before. The question is when and at what price. Until we see see sustained inflows back into Bitcoin ETFs, stabilization in price action above key support levels, and an improvement in broader market sentiment, this remains a very challenging environment for crypto investors. Stay safe out there, manage your risk, and remember that in markets like these, preservation of capital is just as important as seeking returns.